Hello everyone and welcome to the second video in the FINA 5000 DCF tutorial. Today I'm going to be helping out with the second step, which involves linking the free cash flow tab of the spreadsheet to the relevant data in the financial statements. So that's going to include linking most of the information in these assumptions and also most of the information in the first column of our free cash flow analysis. So now we're going to jump straight into inputting the information in the assumptions on the free cash flow tab of our DCF model. So first we have the company ticker, which I know off the top of my head from Home Depot that it's HD. But if you don't know what your company's ticker is, you can either Google it or go to the overview snapshot page in FactSet, and it'll have the company name with the ticker right next to it in parentheses. Then next, for the current share price, you can actually find this at the top of any of your 3 different financial statements that you downloaded in the previous video. Basically, you can just reference it directly. It's right here underneath the company name. And then now for shares outstanding, we'll actually find this on the income statement. And then if we scroll down to where it says the earnings per shares number, we want to find the diluted shares outstanding. And you'll notice that it says diluted shares outstanding M, and the M actually stands for millions. So we're going to reference the most recent one, and because it's in millions and the rest of our spreadsheet is in billions, we're going to actually have to divide this by 1,000 so that everything on our spreadsheet is in the same terms. Then next for cash, you're going to want to go straight to the balance sheet, and then up at the top, most likely it'll say cash or cash and short-term investments. If it does say cash and short-term investments like it does for Home Depot, then that's totally fine to reference because short-term investments are effectively the same thing as cash because the cash comes back so fast. Next, for debt, we're going to add up any interest-bearing liability on the balance sheet. So looking at the liabilities, the first thing that really sticks out is long-term debt, which we know for sure is going to bear interest because it's long-term. The next thing that sticks out to me is short-term debt and the current portion of long-term debt. Although those are short-term obligations, they are typically less than a year, they do actually bear interest and therefore should be included in our debt calculations. Accounts payable and income tax payable, however, don't bear interest, so we don't need to worry about those. Other deferred tax liabilities also do not have interest, therefore we do not need to worry about them. But make sure you think about each of the different liability items on the balance sheet to make the decision of what to add up for your debt. Next, we're going to calculate the effective tax rate, but before we can reference it, we actually need to do some calculations on the income statement sheet. So basically, go to the income statement and then come down to here where it says income taxes, and we are going to insert a row directly below it, and then we will calculate the effective tax rate in each year, and we basically calculate that as the income taxes divided by the pre-tax income, or the earnings before taxes, as it's sometimes known. Then we're basically going to take this and we're going to copy and paste it in the next couple of years, and then we will take the 5-year average of this effective tax rate in order to get an average of what Home Depot's effective tax rate might look like in the future. Then next, we have to keep in mind that this is a percentage, so we're going to have to format it as such, and I will also label this so that in the future if I come back, I'll know exactly what I'm looking at when I see this cell. And then now that I have the effective tax rate properly formatted, I'm going to go back to the free cash flow tab, and I'm going to reference this 5-year average effective tax rate, and we will use that as part of our assumptions going forward with the rest of the model. The rest of the items under assumptions are things that we will actually calculate in later videos, so we can skip over those for now. But next we are going to reference the revenue, which is on the income statement. We basically go here and we find where it says sales or revenue, and then we reference the most recent year for that. We're going to basically do the exact same thing as well for the earnings before interest and taxes, which is found on the income statement as well, which will reference the most recent year. Then next, we are going to reference the negative of the depreciation and amortization. So we're doing this because we're subtracting depreciation and amortization here, so we want to have this as a negative number. So we do negative, and we go to the statement of cash flows to find this, and it's typically up near the top, and we see it says depreciation, depletion, and amortization. So we'll reference the most recent value. Now, it's worth keeping in mind that on your statement, it might actually be a little different from this. It might say depreciation is one line and then amortization as a different one. So if that's the case, do negative parentheses and then add them together so that you get the negative of both in this cell. Then next, what we're going to do is we're going to actually calculate the EBITDA by taking the earnings before interest and taxes and then adding back depreciation. So we take EBIT, and then now this is a little tricky because we have the negative of depreciation here, and we want to add depreciation, so we use a double negative by subtracting, and then click on this cell, and then that gets us back to the EBITDA. The next step is we're going to calculate the EBITDA margin, which we do by taking the EBITDA and dividing it by revenue. we're going to basically do the exact same thing for the EBIT margin. Basically, just take EBIT and we divide it by revenue as well. Next, we are going to reference the negative of taxes by doing equals negative, and then we're going to go to the income statement. And down here where we were calculating the effective tax rate, we find the most recent income taxes and then input that. And then now we are going to calculate the net operating profit after taxes, which we do by taking the earnings before interest and taxes, and we subtract off the taxes, which we already have the negative of it, so we just need to add to get to the net operating profit after taxes. Next, we want to add the depreciation and amortization expense, which we can actually use the one that we've already input higher up on the income statement by taking the negative of it, because we're trying to add depreciation and amortization here. This is the negative of it, so we just want to take negative that value in order to add our depreciation and amortization. Then for net working capital, you can ignore that for now. We're actually going to calculate that in a later video. And for CapEx, we're going to subtract it, but here you actually don't need to put a negative, because when you go over to the statement of cash flows, you basically come down to here where it says investing activities, and it'll typically say capital expenditures, and it already will typically be a negative number on the statement of cash flows, so you don't actually have to subtract that here because it's already a negative number. Then next, we're going to calculate the unlevered free cash flow by simply taking the NOPAT and adding together the 3 cells below it, because we already have the proper signs in the cells, we don't have to worry about those, so we just add all 4 of those numbers together to get our unlevered free cash flow. So that concludes all the steps for this video. In this video, we've linked the different assumptions to the relevant places on the financial statements, and we've also filled in the current year's data for the free cash flow analysis. In the next video, we are going to project the various items on the free cash flow tab, starting with the income statement items using historical values. Thank you again for watching, and I will see you in the next video.